This is Eric Mother with Mother.com with a quick educational video. This is US markets here for June 7th, 2021. And this is how your markets are shaping up. Let's take a look at the Dow transports, and we're going to use what I call strange lines, but they'll make sense in a little bit. So this is 3 years of weekly data. And remember, these lines that I'm going to draw are pretty much using the chart itself to tell us how to interpret the data, as opposed to us forcing our will and our analysis onto the chart. Hope that makes sense. So we are using the chart itself to give us an indication of what it responds to. Having said that, let's begin. Take a look here, 3 years of weekly data on the Dow transports. Take the lows here of the RSI in 2018 on the weekly there, connecting with those lows. And there's a little bit of a low here corresponding with that price level. What we're going to do is connect the RSI points as such. Something like that. Now you'll notice clearly there's a break here, and this break was significant for the market because the market had a response down, an aggressive response. So what we're going to do is use that information, and we're going to extend the same line. And there you have it. It's something like that. Now, let's investigate this a little bit further. Notice we come back to test the line here. There's a short-term stall off the highs there. And later on, we do finally clear that area sometime in July, which is this corresponding move in price. So in a way, we can say that this was movement above the red line and prices did respond well. We haven't been back to those price levels. Also, you'll notice that we use the line with uniform action support off the lows there. We go below the line, looks like a break, but these markets are full of tricks. Remember, uniform action means trap. Once we recapture this line again after uniform action, it's an inverted, it's a V, it's a V, uniform action below the red line, back above it for that re-entry right there. And now to the point I'm trying to make. You can see we've come back to test the red line, which means if we can bounce on the line, we have an opportunity to continue higher from current levels after a pullback off the highs about a month ago. So we can use the red line for support. Alternatively, if we break down, that's not good, because remember, when we broke down here, there was a reaction down. So we are using the chart itself to tell us how to look at things. There's one other line I would like to bring forth, and it is the line connecting recent RSI lows. Now, because the two lines are pretty much intersecting at this time and space, we can see that there's a decision here that the market is going to have to make. If it ends up breaking below the two lines, then we can anticipate momentum to be swinging down for an aggressive selling period. And we also know that the two lines could end up offering support. And if that support is taken, the opportunity that is, then it means that actually the market sets the stage to potentially test recent highs, if not improve on those highs. So the strange lines I was talking about in the beginning of the video are just the charts, the lines that come from the chart itself, trying to understand how the market is responding. So that is how you use the RSI when you are on the hunt for unbiased market indicators and direction. And so it is. E-A-C-S. Eric Mother with Mother.com. Love, light, light love. Namaste.